Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs. Can you hear me? Counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast partners, Massar, Tim Stenovec. We welcome in our audiences across Bloomberg Television, Radio, and YouTube. Another volatile day here, Carol.
Yeah.
Obviously, most of that volatility, at least the start of it, was in the oil market.
Yeah, no doubt about it. We've seen some big moves once again. I mean, that seems to be the one thing we can count on. I've been watching the financials. As rates have moved up, we've seen investors move in big time into the KBW Bank Index. That index alone up about 4% here, guys.
Even though we've seen a lot of big moves of late, these moves are pretty outsized. S&P 500 on pace for its best day since June of 2020. Get this, guys. The NASDAQ 100 on pace for its best day since exactly 1 year ago.
Yeah, and there have been the similar moves for this overall NASDAQ as well, so big tech getting a run up. We are seeing a little bit of a rollover in the Dow, as you'll see, just off of its highs, but really this has been a story of commodities, how we are starting to see a plunge in oil, there's no other word for it, and what that has meant overall for a decision to buy into equities right now.
Certainly seeing that risk on trade. I think it was interesting for the radio audience. We just had a really interesting conversation with Nadia Lovell over at UBS saying that you're starting to see spreads widen a little bit. Romaine, you would typically see that when yields are starting to rise, but it is signaling that there might be some concerns about growth up there, but we're nowhere near some of the levels that we've had in, let's say, March of 2020.
Yeah, and I always hate to pour cold water when we have these types of rallies here, but remember, we've kind of been here before over the last few weeks where we've had these big drawdowns and then you get a 1 or 2 day rally here, and then something happens and everyone
You're calling it a dead
goes
cat
back.
bounce.
I'm not. I'm just saying that we should wrap ourselves up
Why
in
do we
caution
call it a dead
like Kim
dog
Kardashian
bounce?
and waddle our way down the catwalk
Why
with a little
is it
bit more
dead
caution
dog
here.
bounce? Why
No,
do you
no
have to
cats.
hate on cats?
Oh, Taylor. Taylor's our cat lover here.
Yeah,
on the
I'm
show
on team.
here.
I'm on Team Cat with Taylor. I got to tell you.
No.
Stenovec.
I can't say.
Yeah.
And
dead
sorry,
dog
guys.
bounce.
Taylor Riggs, Team Cat here. Let's take a look at what's going on in the market. Disco ringing the bell here. Dow Jones Industrial Average higher by about 2%, 653 points added to the average on the day. The S&P 500 higher by about 170 points or 2.6%. The Russell is higher by about 2.7%. Let's take a look, though, at the NASDAQ Composite and the NASDAQ 100 here, because these were your outsized gainers here on the day, as a lot of those big cap tech stocks got a little bit of their mojo back today. It's going to finish higher by about 3.7% here on the day. Biggest one-day gain officially now going to go in since March of 2021
Romaine,
on the NASDAQ.
did you go to discos in the day?
I'm not that old.
Okay,
But,
just checking.
you know,
All right.
We can have that conversation off air.
We will do that. S&P 500, we talk about the risk trade on, and we're going to get into the sectors in just a moment with Taylor, but we had 421 names in the S&P 500 higher today, 84 lower, Taylor.
Yeah, you certainly see that here on a sector level, Carol. You want to do broad-based, Romaine? We could do broad-based. Take a look at this. The
I
sector,
wish our radio audience could see that.
Well, we'll tweet it out because it actually pretty is stunning. It's a stunning visual. For the radio audience, what we're looking at is the sector winners and the sector losers. It's pretty much all green on the screen except for 2 at the bottom. Let's start with some of the winners. You were talking a lot, Carol, about the financials. That continues to be a big winner today, up 4.4%, as you are seeing yields sort of reflate back up higher. And it is pretty risk on. It's durables, it's semiconductor, it's software and services equipment. Those are all up more than 4%. You go down to the bottom and, well, it's sort of a classic reversal, Carol. Everything that we saw yesterday in the year, that's reversed today. Utilities and energy, the worst performers, you're off about 3% or so.
You're all going to be asking, oversold bounce, or is it sustainable? And that could be a question for Bumble because, man, that's the top of my gainer list today. It was up as much as almost 50%,
Wow.
right? Yeah.
Well, it's 42% to be exact.
Well, that's at the close, but at its highs, it was up almost 50%. Let's get it right here. All right, but this was
You
the
have
case.
Match Group on your board, too. There's a lot of dating going on. What's
Well,
that?
well, you
Are
know,
you trying to communicate
BMO
something?
Capital Markets saying, let's make it a double date. I mean, they basically upgraded the 2 stocks, both Bumble and Match. See what I did there? So Match was up 13% as well. So they moved it up to an outperform from a market perform. They're optimistic about the prospects for online data. Go figure. Bumble, though, can I just point out, it is still down 70% from its high back in February of 2021. So a long way to go. Just want to mention Caesars Entertainment. If dating isn't your thing, perhaps gambling is. It was top in the S&P 500, up the most in almost 2 years. Stock was up about 10.5% by the close. Launched mobile sports betting across Illinois. They are now live in 22 states and jurisdictions, 16 of which are mobile.
Dating and gambling.
What? Dating
You
and
can do
gambling.
both, right?
It's a good and heady mix.
Well, you know, when you're risk on, sin works as well.
Well, let's talk about some of the moves lower today. You heard Taylor talk about the energy sector under pressure today with oil prices moving lower. The worst performer in the S&P 500 on a points basis and on a percentage basis today is ExxonMobil. ExxonMobil, it's already up 34% this year, 58% last year. So keep that in mind. Yext also under pressure today, finishing the day down by more than 9.2%. The revenue forecast for the first quarter falling short of analyst estimates. The company shuffled its management after those forecasts fell short. Multiple analysts downgraded the stock after the company reported as well. And this is an interesting one, Natera. It's a prenatal testing services company. This short report came out from Hindenburg earlier today. A lot of pressure on the company's stock as a result. I should note, the company did come out and say in response to that report, quote, "We disagree with the accuracy of this report, which was generated in an attempt to make a quick profit by short sellers." It's the same story that short sellers have been pitching for many years.
And we should point out, too, I thought this really caught my eye earlier today, too. And I mean, Hindenburg has an interesting track record. And I remember they, took, of course, that position against Clover, which was made very public. And I guess to a certain extent, I don't know if they were proven right, but it certainly, at least as far as the stock's performance, certainly proved them right.
Meanwhile, I mean, Natera, sort of the testing that many are new, hopeful of building a family, people are dependent on. So an emotive kind of a subject. Meanwhile, I'm looking at what has been an extraordinary move cross-asset. We talk about the rally that we saw in stocks. Talk about the rally that you saw in certain FX pairs. Let's have a look across asset for my radio audience. Euro up 1.6%. Biggest rally we've had since 2020. Now, this is after we've seen the euro under considerable pressure. We've worried about the eurozone in terms of a growth. We've worried about, of course, the fact that the ECB isn't likely to be hiking rates anytime soon. We've seen, of course, the move by the EU to shore up the economy, to potentially be selling bonds, to be able to spend more on defense. And indeed, we've seen a 16-month, biggest drop in 16 months for the dollar index. We're off by almost more than 0.9% for the dollar index, as we have this myriad of headlines, whether it be hopes that some sort of, dialogue can be brought back again between Russia and Ukraine, diplomacy, call it compromise. Some are going as far to say, look, the headline risk is big for us at the moment, but we look at some sort of hoping there, and we look at what has been a commodity story. Money moving into risk assets as we see Brent off by 12%, WTI crude off by 11%. This is as we traded $110 a barrel. At one point, we were falling more than 17% on Brent. We see heating oil off by 20%, gas oil off by 25%, all as we eye the CPI reading tomorrow, and all as we see the yields rising on the back of all of this. We're currently seeing risk. On means that we sell off out of European debt in particular. What about the U.S., Taylor? Yeah, so similar of a story here as well, Caroline. It is yield higher pretty much all across the board. And as Romaine had mentioned, it really is looking at the front end of the curve now at 167 on the 2-year yield. We've surpassed where we were a month ago, now looking at the highs that we haven't seen since December of 2019. You go further out on the yield curve, that's not so much the case. We're still at 194 on the 10-year. Remember, we were well above 2% before the Russia-Ukraine war. So we're not quite there, but yields indeed have been the long-term path is higher. Yeah, well, and we can get there pretty fast. So because remember, we got to 206 on an intraday basis. What was it, mid-February? And I remember when we were making those moves were in 8-10 point increments that we saw. So I mean, we're not that far away from it. Right. Meanwhile, we, of course, keep an eye on how the market continues to shift ahead of the all-important data tomorrow. I mentioned it. Inflation is where we're going to be tracking our eyes. In response to inflation is where we're going to be taking our eyes as well with the ECB. Have you seen, like, the price of, like, bread? Have you gone, like bread, just basics? Should we debate how cheap cheaper is in I don't want to talk fuel because I know Carol, she's the big spender here, so it doesn't really affect her. But when you talk about just like basic goods, bread, eggs, my wife was ranting about this the other night. Well, I mean, look, it makes sense. And how much worse is it going to get given, the turmoil in Russia and Ukraine and given that, they provide so much of the world's wheat. So you have to wonder how much prices are going to go up or what's priced in now. Yeah.
So how does the Fed think about this, right? Like ultimately, the inflation print tomorrow, it's important. It has some of the energy data in it as a result of the invasion into Ukraine and higher energy prices. March is going to be interesting, but we've got to watch to see, Tim, where we are seeing inflation. Is it wages? Where is it? And how much of that is sticky? David, we just spoke to David Dietz over at PPAC Private Wealth Management, and he said that, back to the conversation that we had earlier about inflation moderating when it does actually get past its peak, he doesn't know if we're actually going to go back to that pre-pandemic level of sub 2% that we saw before we entered the pandemic. That, we could be at a new normal now. All right. Just want to quickly mention, if I can, CrowdStrike, it's up almost 9% in the after hours. That forecast is upbeat, so we're seeing investors move into it. All right, guys, we got to run. That'll do it for our cross-platform coverage on radio, TV, and YouTube. We'll see you again, same time, same place tomorrow.